Well, everybody, welcome to the August webinar here, where we're going to talk about how to invest in a vacation rental in Costa Rica. So we do these every month. I think we're going to be releasing what we're going to be doing in September after this, but just to give you a sneak preview, we're going to be talking about value engineering in construction. So basically, when you get your bid back, well, number one, how do you go out for bids? And then number two is how you actually reduce that price. And to give you an idea, we've been able to reduce prices anywhere from 10 to 20% once we start value engineering things. We actually had a client up in Arenal. His bid came back at, I think it was like 670, and we ended up getting it down to 530 in the end with quite a few changes. And not that many structural changes, it was just a lot of changes to finishes and doors. And again, there's always a lot of errors in bids as well. So we actually spend quite a bit of time in that. But you're here to listen to us today, talk about how to invest in a vacation rental in Costa Rica. So your speakers today will be, of course, me, Richard Bexon, Managing Director for Costa Rica Investments, and also Jake and I, we work together. Jake is an investment specialist and works with a lot of clients looking to invest in a vacation rental in Costa Rica. So welcome, Jake.
Thank you. Thanks for having me.
All right. It's not your first rodeo, I'm sure. So yeah. I just want to quickly run through the agenda today, guys. We're talking about factors here, factors that drive vacation rentals and their returns here in Costa Rica. We're going to go a little bit over the country data as well. Every single time that we do one, I think the last time we did this was back in May, so kind of just updating what's happening in the country with regards to arrivals and also airports as well. Then Jake's actually going to cover vacation rental data, kind of more the locations, looking at occupancy, average daily rates, kind of a number of listings in area, what's going up, what's going down, seeing any trending. He's going to also talk a little bit about some modeling and examples there. We've got 3 examples there of just investments that you could make in Costa Rica, just so that you have an idea of how we go about doing the modeling when any of our clients or us personally look to invest in Costa Rica. I've also thrown property management in there as well, guys. A lot of people that are looking to get an investment here in Costa Rica in a vacation rental require a property management company. So just wanted to cover that a little bit as it's not actually kind of widely covered, and there's kind of a wide gambit of property management companies, but just wanted to go through kind of some of the things and questions that you should be asking them. And then also just our advice when investing in a vacation rental in Costa Rica. So it's kind of just the general agenda. We should probably be around about 20, 25 minutes, I think. And again, if at any point through this you have a question, feel free to, just post the question there in the Q&A and we'll do our best to answer it as soon as we can. Okay. So first of all, was more of the factors that we look at when making an investment in Costa Rica. I think it's important to just share kind of I suppose our investment philosophy that we look at when looking to invest in Costa Rica. So we're looking at tourism trends here, guys, and we're going to get into that kind of a little bit with country data. We're not going to go as deep in this one as we did in the webinar in May, where we started to look at search data and kind of like intent data online as well. Maybe a little too deep for today, but we look at tourism trends. This is something that we personally spend a lot of time in, looking at the search data basically online, looking at the search data that we have from various sources, and then also the search data from the tourism sector, because we have access to some pretty unique private tourism data there from some of the the largest tourism companies here in Costa Rica. That really just helps us get an idea of kind of what's happening in locations, and that's where we go to locations here. So location has a huge impact on the actual investment as well. And Jake covers quite a bit of that when we look at occupancy, its average daily rates, listing growths, and there's also a bit of gut in there as well from me. Not that I'm shooting from the hip, but I usually use the data as kind of just to give me a general direction. And then from there, basically, we'll kind of use a little bit of gut when I'm actually in the area and just chatting with people. And as I mentioned there, average daily rate, occupancy, and also number of listings. And also some analysis that we have our guys do here in the office on rental returns, cost to run a property. Electricity is more expensive in other parts of the country. You need more air conditioning in other areas of the country, etc. So we always do that analysis. And then also just looking at property management as well, because property managers can take anywhere from 20 to 40% of your revenue there. So that's a huge impact there actually on your rental returns there. So just to summarize here, guys, and apologies if this is very simple, this is kind of the formula for generating revenue in Costa Rica. 365 days a year multiplied by your occupancy percent multiplied by your average daily rate basically equals your revenue. It may sound pretty simple to a lot of you. Maybe for some of you, you've never kind of seen it typed out like that. But these are kind of the variables here. The 365 is not a variable. That's how many days there are in a year. But the occupancy percent and also the ADR does. And again, that's dependent on location and also product as well. Because sometimes there are locations that don't have high ADR but have high occupancy because they don't have luxury product there. And then that's where you need to take a look at, are there luxury hotels? Do you think it could work? And that's where kind of the gut comes in a little bit. And then, of course, you have to take your revenue, less your expenses. And I think sometimes it can be very difficult to get those expenses if like this is your first time doing it or you're not too sure, and then you divide that by your investment to basically get the return on investment. So we do a lot of analysis on properties. You can actually go to the website, investingcostarica.com. There's a curated investment section there. You can just scroll down on the homepage and find it, sign up for it, and you can get in and you can actually get access to some of that data there as well. We're also happy we've actually done for quite a few people just a bit of quick analysis there when they've asked us to. So if you have a property that you'd like us to analyze, feel free to email us. The details will be at the end of this, but it's just info@investingcostarica.com. We'll have one of the analysts here take a look at it in the office and then basically kind of send it back to you. Okay, so that's just the formula there, guys. It's plain and simple. I'm sure for some of you it's like duh, but for other ones you may not have seen it out like that. And again, there's a lot of variables at play there, as you guys can see. And we'll get into some of those variables a little bit later on. Now getting into, I think, Costa Rica's country tourism data. And I always like to look at this as it gives us kind of a bit of a macro view of kind of what's happening here. We're going to look at tourism data over the past couple of years. I'm focusing on really arrivals and also airports as well, guys, meaning San Jose, Liberia. And we also touch a little bit on the private charters as well, which is starting to see a bit of movement here in Costa Rica. So the first thing I want to take a look at here, guys, is actually January to July, 2019, 2023, and 2024. Why January to July? Because that's the only data that we have so far for 2024. So in order to compare apples to apples, we need to compare those periods exactly for all of those periods. 2019, as I like to say, is the pre-steroid era, of what it was before the pandemic. 2023, is kind of what, as I like to see, the steroid era. And I think 2024 is really going to set the bar for the new norm here, guys. So I mean, here's the data. I'll just give you a couple of seconds to just take a quick look at that and kind of consume it. But you've got 2019, 2023, and 2024 there, guys. Okay, so that's the data there for July for total international arrivals for tourism in Costa Rica. Okay, so as you can see there, there has been quite a bit of growth in 2024, 14% over 2019. So people are always asking me, hey, Rich, what's tourism going to look like in 2024 and 2025? 2024, I think you're going to look at a number, around, anywhere from 15 to 20% increase over 2023. And then going into 2025, I think you're going to start to see a 10% increase year and year after there. I don't see that stopping. More airlines are coming here. We have larger brands, Ritz-Carlton, Waldorf, etc. coming in here, and just the airlines. So these are just helping to kind of put Costa Rica a little bit more on the map. Okay. One thing I wanted to look at here was seasonality. This is basically a graph of monthly arrivals by year from 2019. I removed 2020 just because, again, it was the pandemic year and it made the graph not look so nice. I wouldn't say nice, but anyway, it was just a very weird year because of all the borders were closed for the majority of the year. But again, I think what you're seeing is 2024, returning to seasonality, as we can see here. 2023 barely broke pre-pandemic numbers of 2019, but 2024 is showing growth there, as I mentioned, a 14% growth. And again, 2024 will outstrip, will be the best year for tourism in Costa Rica. When talking to a lot of the hoteliers here in Costa Rica, they're saying that, there's a return to seasonality. They're seeing the high and the low season. I was actually expecting this when I looked at the data for 2023 and 2022 to see it a little bit flat-lined. I wasn't expecting to see the dip in September and October. I was expecting to see it a little bit flatter. But there was seasonality in the arrivals, but the hoteliers didn't see seasonality. And I don't know why that was. Whether the locals, Costa Ricans were traveling a little bit more in the off season because the borders still kind of weren't open for some countries and restrictions. So it was kind of pulled up by that. But I was expecting to see a bit of a flatter line there for 2022 and 2023 and not so seasonal. But 2024, as you can see there, guys, it's just going to follow the same pattern. It's just going to be a line above. And I think we're going to see that for 2025. And again, if everything stays as it should do, you'll continue to see that as it goes into the future. Now what we're going to take a look at here, guys, is, we've done the country, we've done seasonality. We actually take a look at arrival data by airport. Okay. When I started in tourism in Costa Rica, which was in 2005, Liberia, San Jose was an 80-20 split. As you guys can see there in 2019, it was a 73-26 split. Then in 2023, moved to a 68-31 split. And now it's a 65, basically 34 split. So, Liberia continues to grow and outstrip San Jose. San Jose can't grow more really much, guys, whereas Liberia has a lot of space to do it. But all of the larger properties and hotels are going into the northern parts of Costa Rica. So I think by 2030, which is a long way off, you're going to start to see like a 45-50 split, maybe even getting close to 50-50, as a lot of the new airlines coming into Costa Rica are just going into Liberia. And it's you can just see there, it's just the trend. It's just moving more and more business there, basically, to Liberia. So I think when looking at investment, you have to consider that as well. I personally, people might be saying, hey, Rich, why are you investing in areas like Manuel Antonio then? And, it's just the data draws me there and I'm able to get in at a decent price in Manuel Antonio. It has great occupancy, as you'll see by Jake's numbers there. Its average daily rate is not as good as the other part of the country, but I think that's because it's an older destination that needs kind of a bit of a facelift. But I wouldn't discount San Jose. I just think if you're going to make a safe investment outside of your home country, just bear in mind that the majority of the traffic is starting to move toward Liberia, guys. Okay. And then once you just start to see, those percentage changes year over year, as we say there, 2019 to 2023, a 0.77% change, 13.46, and then 14.33. This is just the average. This is the kind of the overall airport arrival changes, guys, that we're seeing there. Okay. And that's January to June. I think the July data just came out, but I don't think you're going to see much of a swing there, guys, really, in that data there. It's not going to change that much. So, as I mentioned there, Costa Rica arrivals continues to increase. Liberia arrivals, as I said, there could be 40 to 50% over the next 5 years. Costa Rica had stated that by 2030, it's going to have 5 million travelers. I don't think that's going to be correct, guys. I think you're probably going to be looking, probably I would say, around the $3.5 million, maybe up to $4 million to 4 million travelers. 2023, we saw 2.47. We'll probably see about, probably about 2.8, 2.9 this year. And I think that, again, by, over the next 5 years, you'll probably start to see it get to about maybe 3.5, maybe even touching 4 million travelers there, guys. And I think, again, you're going to start to see that trend push towards Liberia as well. So, again, as I said, you just need to bear that in mind when making an investment in Costa Rica. So you have all these travelers arriving into Costa Rica, pushing more towards Liberia. Hotels aren't being built quick enough. If anybody has ever tried or knows the industry here, it can take 3+ years just to break ground. And that's like a fishing. And sometimes it can take 5, 6, 7 years. The cost of operations in Costa Rica continue to increase. There are other areas of the world when doing an analysis against Costa Rica, people go, oh, okay, for hotels, it's just much easier. I can break ground quicker. The government gives me tax breaks. The cost of operations are lower. So I'm going to go somewhere else. That being said, we're starting to see high-end hotels move in here. Ritz-Carlton, Waldorf Astoria, guys, moving in here. They were talking about that there's a Hyatt moving in as well. That's the, I would say the chisme or the, what do we say, chisme in English? That would be the rumors on the streets, but I don't believe anything until, anything starts to move ground here. But I think vacation rentals are going to start to become the new hotels, and we're definitely seeing that. And property managers are starting to offer basic services like breakfast, chefs, daily maid service, concierge that hotels offer as well. So we're definitely seeing it. I think we're part of that trend as well. So, it's a lot more affordable to do, a lot easier to do than getting all of your permitting basically for a hotel. Okay. So what I'm going to do now is hand it over to Jake, and Jake basically will talk about the location rental data here. So over to you, Jake.
Thanks, Rich. Yeah, let's move on to the next slide here. We're gonna look at notable occupancy changes in some of the most popular locations. And look, immediately looking at this, I think the first thing your eye is drawn to is 15, almost 16% in Papagayo, which looks great, but bear in mind 42, 43% occupancy, depending on your ADR, might just be your break even point. The the other thing that really jumps out here is what we had been talking about with Playa Grande as it becoming a stronger destination. I know we have a bunch of houses we've built out there for people, and you see that occupancy increase 9%, over 50%, almost 54%, really pushing Grande up into a stronger destination. And on the other end of the spectrum, when you look at places like Jaco, Manuel Antonio, Cobano, Santa Teresa, there's still growth. It is a little bit slower, but for a place like Manuel Antonio, it's an established, like you said, an older destination. Maybe those areas are seeing some saturation, or that the new supply maybe isn't attracting new occupancy proportional to demand. So if you are looking to invest in one of those areas, it's important that you do really set yourself apart from what else is already out there.
Yeah, I mean, I agree, Jake, just because, I mean, I think Jaco is about to get flooded with 1, 2, 3 bedroom condos. It's doubling its inventory. And I don't know what's going to happen to that. But I mean, when you compare Jaco being one of the top tourist destinations in the country, at 45% is not exactly great, if that makes sense, when you've got other ones in the 55, 56%. But I think what was interesting there that you mentioned is Playa Grande. I mean, Playa Grande is coming on to be, and to compete with some of those top destinations. But yeah, I mean, we've been harping on about Playa Grande for 3 or 4 years. So, we're probably 0.1% of that may have been us in that increase. So yeah.
And to your point of the high end, if you drive around Playa Grande, the majority of what's down near the beach is all high end luxury villas, not saturated with condo towers.
Yep. Yeah, I agree. It's very, I think once there's one condo tower, it's very easy to build other ones. And then, you could see, I don't know, 100, 150 properties just come on the market in 2 seconds. And that has a huge impact in your occupancy and average daily rates because there's more competition.
Yeah, and it's much harder to be unique.
Yeah.
If there's 80 other two-bedroom condos, what are you doing to make yourself really separate and apart and better?
Yeah. And I think that comes back to a point which we'll discuss later is property management. You need great property management because they're really part of your success.
Yeah.
Right.
And let's move on to the next one here.
Right.
So this slide, we're looking at the total number of listing changes from 2019 to 2024. And, also while looking at this, just keep in mind the occupancy data from the previous slide. You look at Flamingo, Potrero, this area has the highest increase in listings, but a moderate occupancy increase is 6.7%, suggesting that the area is becoming more popular. And I think it's also important to keep in mind what's happening and what's happened in these areas between the times that we're looking at. That marina up in Flamingo was constructed and finished, still working on it, but for the most part done in that time frame, which I think helped increase the amount of listings going in there as well. When we look at Playa Grande, 61% increase in listings with a high occupancy of 9%. Like we said, we're seeing Grande experiencing both supply and demand growth, and a healthy market where that increased supply is also being absorbed by the growing demand.
Yeah.
And, inversely, if you look at Santa Teresa, they've had a really high increase in listings, but only a 3% increase in demand.
Yeah, I have to admit, I've never been a huge fan of investing in Santa Teresa. Just because of the data, but also as I kind of look at it as a bit fashionable. Again, this is just my opinion as well. It's like it's fashion, it's very young people there. And fashion kind of comes and goes. I prefer to, have established areas where families go, because then again, that fashion doesn't come and go. It's just, it's interesting looking at just some of these points here of like this Bujuco has started to come on the scene here, Jake, which is basically Punteslita and Playa Coyote, which is Coyote is becoming the new, I would say, when I first came here 20 years ago, Santa Teresa was kind of where all the locals kind of went, Santa Teresa and also Grande. Now they've started actually to move to Coyote. So I'm always to like people like, look, if you want to know which the next beach to kind of pop is over the next like 10 to 15 years, just figure out where the locals, like the cool kids are going, the surfers and stuff. And then that's going to tell you where you should be like potentially looking at for a long-term, investment. And it's just interesting there that they had 68 and moved to 103, but it's still beyond Papagayo, which I think is an anomaly. It's still one of the lowest, basically number of listings, if that makes increase. As a percentage, yes, it's a lot, but as a number, it's just not huge.
Yeah. Well, and it's an area that's not super easy to get to,
True.
but I think we'll also see on the next slide how that number of listings does drive the average daily rate there. So looking at the average daily rate, it's had the highest increase
Wow.
by a significant number. So why? Well, growing demand, limited supply, driving up the prices, and it'd be curious to see what a lot of the new listings there are like.
Yeah.
Is it luxury? Is it not? The interesting thing about that area in particular too is how close you can actually get to the beach and have a beachfront property,
Yep.
which I mean, here is very difficult and hard to find.
Yeah, I mean, look, in that Punteslita, Punteslita is part of the Autograph, the Marriott Connect collection. The Coyote just down the road has great water infrastructure. It has, active concession beachfront. I have a lot of friends who have properties there and that were building large properties there as well. So, and I say it's all Costa Ricans. It's not, foreigners coming in. It's all Costa Ricans. So they just Costa Ricans kind of go to like Santa Teresa, then they sell their properties, make a bunch of money and then go and find the next beach. They all kind of seem to move together. And it appears that the next beach at the moment is that, that Coyote area.
Yeah, it'll be interesting to see what how the town infrastructure changes over the next 5-10 years, because there's really like one corner supermarket next to the football field and like a little bar, and their big thing that happens there every year is the off-road rally in October.
Well, I mean, look, Grande was like that 10 years ago. Actually,
Yeah,
it was like that in 2000 and 2020. If you went there, it looked exactly like that. I was there in 2020, and like there was the Ripjack Inn, there was a little pulperia, and then that was about it.
yeah, and now look at it. I mean,
Yeah,
it's crazy.
yeah,
So also looking at the data here, when you look at a place like Manuel Antonio, you had mentioned that the ADR certainly isn't the highest, but it's a mature market, it's established, there's a good balance of supply and demand. However, so what do you do to get a higher ADR? Well, it emphasizes the importance of having a unique property that really separates you from what else is out there to drive up your occupancy, but also how much you can charge.
yeah. Well, I mean, look at Papagayo. I mean, you had mentioned there in Papagayo, it was like 45% occupancy, I think. But look at that average daily rate of $2,000. And that's actually, I mean, I think that there's some condos up there in Papagayo. When we say Papagayo, we're talking the peninsula where the Andes and the Four Seasons are and all those homes. I mean, there are homes up there that are $20,000-$30,000 a night, and they rent at 40% occupancy. And at that rate, it's that balance when I go back to that formula of 365 times your occupancy times your average daily rate is your revenue, you see. So it's sometimes your average daily rate can be so high, but then your occupancy a little lower. And sometimes it can be even, and sometimes it can be completely the other way.
Yeah. And then, looking at that, I think it's also a similar thing that we see in Santa Teresa where you have to spend so much upfront to be able to get that return that you're looking for.
Yeah. Yeah.
All right. So, and here, locations with the highest occupancy rates. The interesting thing I see about this is, you look at the top 1, 2, 3, 4 areas, and it's all San Jose. Now, how many nights are people staying there? My guess would be 1 or 2. I don't look, it's not like people are going to stay in San Jose for a week. But, it's been interesting to see how, you look at that change there, especially with the amount of listings. So year over year, you created about, there's only 11 more listings, but a much higher increase in occupancy.
Yeah.
So, San Jose as a whole, occupancy is increasing to the point where demand is really outpacing the new supply.
It's funny, Jake, because I was driving with my wife the other day and we saw the San Jose skyline, and I was like, wow, 20 years ago that did not look like that. It was very flat. You had the Banca Nacional building, which was the tallest building, and that was it. And now you've got towers going up everywhere, like everywhere. I think the occupancy numbers could be high. I think we need to dig into that data a little bit more and see if they are available all year, or there's just people that are renting it out for, there's a lot of the data sometimes can be very dirty that we also look at, but it's also your average daily rates like 50, $75 a night. So it's that balance again between like, okay, in Tamarindo I get 56, but my average daily rate was like 400, whereas in San Jose, probably my average daily rate is about 80 or 100, but I get, 61% occupancy. So once you multiply those numbers out, your revenue number is completely different.
Yeah. And also the way they're building those towers is a lot of them are built for Airbnbs and for short-term rentals, kind of built into the equation. And you can get a 1-2 bedroom place starting, I mean, depending on the building, 150 to 200.
Yep. Yeah, I mean, I think when we analyzed it a while back, because I was looking at, I think it was a Babylon tower I was looking at, because they were advertising 12% returns, but it was 12% on revenue, not on, they didn't mention that. But then once I started looking at the data and met with them and then went over it, they quickly put the phone down on me. But yeah, I was like, look, it's like a 3-4% return, and actually, which is not terrible. If someone's just looking to park money and, potentially get, when they sell it, make money on the sale. But I don't like to do that. I prefer to make money on the actual cash flow, and the sale is just a bonus.
Yeah. Yeah. And I think the other interesting thing when looking at this data here is the slight decrease in Monteverde with the occupancy, which, maybe it just means that the new properties coming on the market aren't as appealing, but it's still like it's 1%. Is that seasonality? Is it new properties? I think it's really hard to pin down exactly what it is, and it's not a really significant number.
Yeah.
I think the other part is when you look at the number of new listings in areas where the occupancy is staying pretty steady, it's showing that it's growing together with the supply and the demand there as well.
Yeah, I mean, I think that, again, going back to my previous point about the next 5 years, every single year, I think you'll start to see an increase in the number of travelers. This number, as long as the number of listings doesn't outstrip demand, like it's not like Hako. I think Hako is going to be a bloodbath over the next coming years. Apologies to anyone that owns a property in Hako, unless it's like a beachfront home, like luxury home, because like you can't beat them. But like if it's a 1 or 2 bedroom condo, I think it's going to be very interesting to see what happened there. I was chatting with David Carr, one of the brokers over there, and we were talking about that. But yeah, it's I think you're just going to see steady Eddie in some of these in these destinations, going forwards, as long as there aren't huge amounts of listing increases. And usually, as you know, Jake, water infrastructure here is very limited, and that's what's going to limit some of this listing growth.
Yeah.
All right. Okay, back to me. So I just wanted to go here, kind of like I say, when the investment magic kind of happens here. We did a webinar that was back in May, and I talked about high and growing demand areas. So there is data out there. It's not great data. I mean, that's the thing with Costa Rica. Somebody was asking me, hey, where do I get data on 5-star luxury hotels in Costa Rica? And I was like, well, number one, there aren't that many of them. And number two, I have no idea where you get that data. Like, I think there is a report out there that does take data from some of the hotels here, but you have to pay for it. I know a couple of my friends have access to it, but I think you just need to take a look at high and growing demand areas. You can use AirDNA. I think the ICT has some data as well out there. We take a look at data with regards to listing growth, also hotel occupancy as well, which we have, which is not readily available there, and just see those high and growing demand areas. And in those areas, look for like kind of those mid hotels where stuff's starting to be upgraded. And Monteverde is a great one there, Jake, because if you roll back the clock 4 years ago, there really wasn't that many luxury hotels there. Now, there's appearing to be more and more luxury hotels in those markets. With Senda, I know Monteverde Lodge has got refurbished, and I think there are a couple of other ones up there as well. I think Monteverde, from a luxury vacation rental point of view, there's definitely opportunity there as well. And that's just one that comes to the top of mind. And also find places where real estate is affordable. As you said there, Jake, occupancy, ADR numbers in Santa Teresa look great, but real estate, once you start putting the cost of what it costs to buy there, the numbers just don't work. So, we're always looking for, those high or growing demand areas. But it just depends what your investment thesis is or your investment appetite. Like if you want to take a risk, you can do that on maybe an area, I don't know, I'm going to pull one out, Avellanas here. Avellanas is starting to grow a little bit. It didn't come up on any of this, but this is where you have to kind of look at the data, but also use your gut. And very difficult, I think, and that's why we do what we do, is we spend a lot of time on the ground. Today I just got back from Guanacaste. Monday I was in Arenal. Jake, you're down in Manuel Antonio. We're all over the place looking. So we're kind of seeing what's going on, because sometimes the data is more lagging than leading. So we're always kind of looking at some leading indicators, whether that may be developments in the area, talking to people, etc. And then we just go back and kind of run the numbers and take a look and say, hey, would an investment here make sense? So, but I mean, the saying here is the money is made on the way in. So you just need to make sure is that you've got something that's affordable, that gives you the returns basically that you're looking for. So in summary here, I'm just going to kind of give you some locations here that are just very interesting. I think strong locations, La Fortuna. I don't think it really came up here, but I still think La Fortuna is a strong one just because of the hotel occupancy and lack of luxury product. And we're actually about to start a 5-room hotel there over fractional ownership. Also Flamingo as well is very, very strong. The data just continues to be very strong there. And Tamarindo, Manuel Antonio, Playa Grande. I think if I was to grade these, I'd probably say your Manuel Antonio, Tamarindo, your A destinations, Flamingo is probably an A-. I think your Playa Grande is probably a B+, and your La Fortuna is probably a B to B+ as well on that one. And of course, Nosada that we have here as well. But again, it's the cost to get into some of these destinations, especially like Flamingo, Tamarindo, Nosada. Manuel Antonio actually has some pretty good deals, and I know that you'll cover that in a minute, Jake. And Playa Grande is starting to get more and more expensive to get into as well. As I said there, depending on your risk appetite and your investment, I suppose length that you want to be invested in something. This Bajuco Puntes Lito is a brand new one for me. When we were looking at this data here, I was like, wow. I'm like, Jake, we got to go and, I don't have a big 4x4, but I know that you do. So we're going to have to get in a rally this year and see what's going on there. Monteverde there, I think, is an up and coming destination. I also think San Jose in the right locations. I don't know much. I have had some investors who are like, "Hey, Rich, I'm thinking about investing in the Central Valley." I'm like, it's easier money at the beach than it is in the city, if that makes sense. Because yes, the occupancy might be high, but the average daily rate, and I think as you said there, Jake, there could be a lot of people kind of coming for one night, 2 nights, etc. But it could also be business travel. It could be Monday to Friday and nothing weekends. Yeah, and then you've also got to take a look at like a lot of major cities like Panama have banned vacation rentals in their cities. San Jose's not done it, but I know that there is a push from the tourism community here to start taxing like EVA, the sales tax here on Airbnbs, which if you're here in Costa Rica with a Costa Rican credit card and you pay for Airbnb, you pay the EVA, the 13% tax. But if you're foreign and use a foreign credit card, you don't pay the 13%, which doesn't make sense. But anyway, so they're just trying to push that one through there. But this is just kind of an area, of just a summary here of like strong destinations and kind of up and coming. And when I say up and coming, that could be up to a 5-year play. I think the Occupancy is probably a 5 to 10-year play. Monteverde is probably a shorter period. You could probably actually do pretty well there, over the next coming years. And San Jose, I think it's up and coming from the point of view of the occupancy looks good. I'm just not sold on the Central Valley with regards to its actual returns based on how much it costs to get into the market and the returns that it's done, because I'm yet to see something that's better than like 4%. So anyway, Jake, over to you for some example properties, sir.
Yeah, so we're going to dive into 3 different properties here that we've identified as good options. We can go to the next slide here. So this first one is a condo in Manuel Antonio. And here's the big difference when you're looking at a condo in Manuel Antonio versus a condo in Jaco. For those people who aren't familiar with the area, there are not giant condo towers in Manuel Antonio. And where this particular condo is located, it's right in the heart of Manuel Antonio. There's only 3 levels of condo here and about 20 units in total. You're getting in the arguably one of the most popular areas that people come to visit for less than $400,000 for ocean view. And this particular condo is actually 2 separate units in one. So you have the option to rent it as a 2-bedroom or separately as 2 1-bedrooms. So with this, you're looking at an investment of 382, 460 after the listing price and closing costs, $15,000 for renovation, really to cover furniture and some small details in there, and looking at an annual return of about 8.7%.
Yeah, I saw a comment the other day, Jake, actually, from one of the brokers that owns one of the large brokerages here. And he was saying, look, I mean, anyone that's promising you 10% returns here in Costa Rica, it's kind of unicornish. I've got someone he mentioning that, someone that's had this property for years, and I think it was in Mazo Conchal, was making 4%. But again, I think it all goes down to that formula and demand. And there are places in Costa Rica you can do very well if you know what it is that you're doing. I mean, you can get, 6 to 8%, returns. And look, this one's 8.7. And I think when we looked at those numbers, we were pretty conservative with those numbers as well. I mean, there just aren't that many units in Manuel Antonio, like this. So yeah.
Yeah, ocean view, right in the middle of Manuel Antonio, walking distance to a bunch of restaurants, even down to the Playas beach if you wanted to. So, it's definitely a unique property. On the next,
I'm just gonna say, Jake, none of these are our listings, by the way. We don't list properties. This is just stuff that we've analyzed and we've been through with clients. So, if someone's like, why are you this stuff? It's like, well, we saw, when we've done the analysis, we saw it as a great opportunity here.
Yeah. And so on the next slide here, this is the analysis on this property. And this is something that we do for our clients. So after we go out and look at properties with them, we go through an analysis, looking at historical data, if we have it on the actual property, or looking at comps in the area. So this is just an example of what that analysis looks like.
This is their real data though, right, Jake?
Yeah. So this one, we actually were able to pull the real data off of it. And that's why you see there's actually two separate daily rates there.
Yeah.
And this was the actual data from this particular unit, tied in exactly how the property management was structured, as well as the HOA.
That's
Utilities was guessed, but
insane at 90% in January, February, and March. But I mean, just the demand is just, you know, I mean, it's there in Manuel Antonio during that period of time.
yeah, and look at the price point. The other, if you want to stay at a hotel for that price point,
Nah, nah,
you're not. I mean, the Falls is about as close as you're going to get, and it's still more expensive and arguably in a worse location.
yeah, yeah.
So this is a condo in Villa Verde 2 in Tamarindo. So you're getting into, again, extremely popular area, with 6% increase in occupancy from 2019 to 2024 for $300,000.
I mean, I can say, Jake, we did one of these. We bought one of these. We actually remodeled it as well, and then actually ended up selling it on. You know, but yeah, it's the remodel cost. I think it was actually about $45,000 as well.
Yeah. And so this one, you'd be looking at an annual return of 7%. And, why do we like this one? Well, the area, Tamarindo, it's popular. And, we talk about differentiating and being different, better. Well, the remodel is how you do that. And then also from, you mentioned you flipped one of these, same kind of deal. You help yourself in the long run there as well. So not only on your annual returns, but when you ultimately go to sell.
Yeah, yeah. Yeah, I mean, I think the interesting thing about this is we've actually done one of these. And Villa Verde 2 is not the most amazing condo development, but it's just that there's demand for it. Like if you were to make an investment, I don't think that many people, or maybe some people would actually be happy to go and stay at it, but a lot of people aren't, that happy to go and to stay at these. But if you're just looking to park money and get some return on it, I think that you could, very easily do that on something like this.
And, again, on the next slide here, you see our analysis and projection on exactly how this property would do. And so you'd be looking at, 7% return there. And the last one would be, it's actually our R&all fractional investment property.
Which
So
is
what we're doing,
fully funded. We're just sharing it as an example.
yeah. So it is fully funded. So, we're doing an investment of 1.1 million. So we did $100,000 at 11 shares, with a projected annual return of 13%. And why R&all? Well, this ultimately goes back to what you're talking about, where the magic happens. So it's a top destination for luxury hotels, extremely high occupancy on those hotels, 70%. Lots of luxury hotels with an average daily rate of $1,000 plus. When you look at the rentals that are already there, they're not that nice, and they're already exceeding 80% occupancy. So looking at all those different factors, we saw the opportunity to put a high-end luxury rental in there. I think if you want something that's even remotely comparable to what we're doing, if you were going to take a villa at the Springs that could sleep just as many people, you're looking at thousands upon thousands of dollars a night.
I looked the other day; it was $5,300 a night in low season.
Yeah.
In
Yeah, and ultimately the affordability of being able to buy real estate up there,
yeah,
for the price per square meter in La Fortuna R&all compared to Manuel Antonio, it's not even comparable.
yeah. Well, thanks, Jake. I'm gonna now jump back in. I know we have some questions here I can see from Josh, Sandra, and we have an anonymous attendee here, but we'll get to that one in a minute. I just want to quickly talk about property management, because as I said here, not all property managers here are the same. Typically, when people buy a vacation rental here, they're also having a property manager kind of run that. So I think when analyzing property managers, you need to look at their occupancy of their current rentals. I think you need to ask them a bunch of questions. You need to ask them for a similar property that they have, comps in those areas, and take a look at their occupancy. Again, we're able to actually see in and actually see property managers and see who actually works best, how many listings they have, what their occupancy and their average daily rates are, what their views are of basically all of their properties. So we're actually, with our clients, we actually provide that data for them and recommend, like, look, these guys have the best occupancy and also looks like they got the best reviews. But, it's also, there's a bunch of different factors here as well. We're also using their tech, that they're also using as well. Some are kind of a little bit more old school and aren't using up-to-date property management systems with channel managers, with maybe integrated locks into those property management systems. A lot of people, personally, I hate to pick up a key. I stayed in a vacation rental last night of a property management company, and I had a key, and I was like, dude, I'm leaving at 6 in the morning. Who am I giving this key to? They were like, just throw it over the wall, and I'm like, okay, well, what was if that they can't find it? Am I now responsible? I just prefer a code. And there was actually a great one that we've started to see, which is the code is the last 4 digits on your mobile. Like the property management system sets the lock because it's a Wi-Fi lock and interconnected to the property management system for the last 4 digits on your cell phone, which I thought was pretty cool because you're always going to remember those last 4 digits. So I think asking about them, the use of tech that they're using, their property management system, their channel managers, what channels that they're using. I think anyone that's just using Airbnb and VRBO, like, come on, guys, like anyone can do that. You need to find other channels out there. Whether that's the Marriott network that they're using there, whether they're integrated with any agency systems, whether they're using any other, age or travel industry, I would say, online travel agents or even specialized travel companies as well. But also, I say to people, like, trust your gut. Interview 3, it's a long-term relationship that you're going to have with them. So you're going to better like them. Like, nobody wants to work with someone that they don't like, and this is a relationship. So just, I would say, trust your gut as well. Ask these questions, look at their rates, ask for a model, ask them a little bit more questions about the tech that they're using, and then also trust kind of your gut there on that one as well. So that's kind of my advice on property management, guys. There are a lot of companies out there. Sometimes people are always like, do I go with one that's got a lot of them, or do I go with someone that doesn't have many? And, I'm always looking for that up and coming hungry person. So I would ask them, like, over the past year, how many rentals do you have in the past year? How many have you added? Because you're probably looking for that property management company that maybe has 10 to 20 and that's started to grow a little bit. Because they're going to be hungry to kind of add more rather than the guy that's got 150, because you're just one of 150 then. But sometimes, people that's what they want. They just want to kind of just stick it with those larger people. They don't want to take the risk with those property management companies and just basically just kind of leave it with them. And there's nothing wrong with that. It just, again, depends on your goals. So my advice, guys, when investing in a vacation rental in Costa Rica, I think the investment's only as good as the team that you have on it, and that consider, investment consultants, whoever's your buyer's rep, whoever your lawyer is, if you're doing any analysis on it, and it's just only as good as the team on it, guys. And I think you just need to understand you need someone in your corner when making investments in Costa Rica. I would suggest sticking to strong tourism areas. They always say that the quickest way to make $1 million in Costa Rica is come with 2 because you'll leave with 1. So I suggest sticking to strong tourism areas because it's a market that you don't really know. So I wouldn't jump into the deep end unless you really, really know it and start speculating. I just wouldn't speculate, guys. As I mentioned here, don't speculate. I just wouldn't do it. If you don't do it back home, don't do it here. This market just is so different. It moves so slow. And sometimes people are like, oh, that beach is going to take off. But when you start looking at the infrastructure in place, you're like, well, it's not going to explode. Like, I look at Avianas, it's not going to become the next Tamarindo over the next 10 years. And it's not going to become the next Langosta over the next 10 years because of the infrastructure there. It will do well, don't get me wrong, but it's not going to look like anything like those just because the water infrastructure from the aqueduct from Paraiso going in there is not big enough yet. And then also, just make sure you've got a clear exit, guys. Buying something in the middle of nowhere where there's not that much demand, that exit doesn't appear to be, very, very clean. So I would suggest that get a good property management company because the cash flow that you're going to get from your vacation rental is going to help you on that exit. So just stick to main areas with good ADR, good occupancy, and you'll find that your exit from something is very easy. It makes a listing agent's job easy when he can say, hey guys, there's also, I don't know, $100,000 of future revenue on this, on the books as well. That's a very easy sell. So yeah, so that's kind of our advice on advising, on investing in Costa Rica on a vacation rental. I hope that's been helpful, guys. I mentioned questions here. I do actually have some questions here that we have here that had been asked earlier. Josh had asked, hey, Rich, do you have any data on average international arrivals compared to new short-term rentals on the market? I mean, we have the data. I would say that vacation rentals, short-term rentals are outstripping the arrivals as a percentage. I think when you start looking at numbers and looking at those ratios, I think that might be an interesting thing to look at, Joshua, on that one. So, Jake, maybe we'll make a note there and see if we can actually take a look at that data of international arrivals, as like solid numbers compared to short-term vacation rentals. And it would be great to kind of split that as well. Maybe not. We'd have to think about how maybe we can speak to James in our office, who's our analyst, and figure out how we both, we'd go through that one. Sandra asked, do you have any data on Atenas or the Central Valley? I mean, we covered, I think, Sandra, some of the stuff there in the Central Valley with Costa San Jose, which is more like Savannah. We have data on that there. The occupancy appears to be good. The ADR is a little bit lower. But if you want to reach out to us after, Sandra, you can just email us info@investingcostarica.com. We'll be happy to kind of just guide you and see what we've got there. I think at Tennis, from what we saw, Jake, if I'm correct, that like the occupancy with growth was pretty strong, but it wasn't that high. I think it was like 45, 46% or somewhere around there. Do you remember that data point?
Yeah, I think it's around there.
Yeah.
And I think it also kind of boils down to the rest of San Jose, where what are the stays really, and are you looking there for yourself or as a like short-term rental investment?
Yeah, I think if I was to do something, especially in Tennis, a lot of people, because it has that famed area as having the best climate in the world, that's like, is its slogan. I'd probably be looking for something there that has kind of more mid-term rentals. There's not like 1 month plus rentals where you can rent from December all the way through to March. I mean, you can do it, but I would be building more affordable stuff in that tennis based on the data that I know in the area, which I actually know pretty well. There just isn't huge demand. I'd say that there is demand for that, or I believe it to be. I just don't think that it exists today. But again, that's me going with my gut. Yeah, for what it's kind of worth on that one. We have here, are most investors paying cash for properties, or are there options for financing? I would say that probably, 90% of people are probably paying for cash here. There is financing becoming available. We've had quite a few clients do it. Jake, you just went through it with a client as well. I think they just need to understand it. Like it's a minimum of 8%, interest rate, which is usually, does it become variable, Jake, at some point?
I think it can be. It all depends on who you're working with, whether it's private, the banks, owner. I think we talk about in terms of paying for things here. Easiest is cash. If you need financing, it's going to be owner financing. After that, we've been looking at private lending, but for that, they definitely want to see some sort of cash flow. And then looking at traditional like bank lending, which is it's doable, but definitely the most difficult.
And I think when you talk about interest rates on that, of course, owner financing interest rates are probably going to be, depends on how desperate the seller is. But, we've done stuff at 5% before. We've done stuff at 8.5%, 9% before. I think on private lenders, you're going to be looking anywhere from 10% plus, depending on what it is. Maybe like a 3-year plus with a max of probably up to 10 years max on that one, and they're probably going to give you 50% loan to value, maybe 60% loan to value on that. And then the banks here, again, they're going to give you 50, 60% of loan to value. Their interest rate is going to be lower. I think probably around 8 to 10%. And I think their loans are 10 or 15 years, Jake, if I'm correct.
Yeah, I think they'll give you, the option.
Yeah. Okay. So I think that answers that question there. Does anyone else have any questions at this moment in time, guys? I'll just wait here for 2 seconds. Well, if there's nothing else coming through here on the question and answers, guys, we very much appreciate your time and joining us on here. Again, these are our contact details if anyone wants to reach out to us. I always say to people, I'm pretty useless, but you've probably worked that out by now. Jake is kind of more the specialist and investment specialist on a lot of this stuff, spends a lot of time with clients. I just say I just write the checks most of the time. So, but very much appreciate everyone's time. Yeah, I hope, actually, we've got one more question. What do you think of Uvita? Well, that's a good question, Akash, because, we've actually seen it on previous reports that have been there. And I think on the most recent one, it started to kind of die down a little bit on that area. But I think Uvita it has good stats. I think it has good occupancy. I think its average daily rate is a little all over the place, just because of, different, I would say, different types of vacation rentals that they have there. But I think it's a great area. It's an area that's been growing with huge amounts of demand. It's just that I think at the moment, you need to find the right property there. With regards to getting in at the right price. I mean, as I said there, you make your money on the way in. So I think you just need to make sure that you're really smart, I guess, on what it is. We had a client in Dominicalito buy a house a while back, which was, I think it was about, was it 300,000, Jake? The one in Dominicalito?
Yeah, I think it ended up being, I think, closer to 350.
Yeah, it's around about there, about 350. It was owner financed as well, and the numbers look pretty good at it. But that was just north of Uvita. If you were to buy that in Uvita, it's probably going to be around about 550. So it just depends on, if you can get in at the right price and the numbers work. And also, Akash, there you said that you're supposed there's be an airport there soon. I've been hearing that for 20 years. I don't expect it. Like, until the runway's being dug up, and even then, I think it's going to be very difficult. So I always say to people, like, invest with everything as it is today. Do not speculate in Costa Rica, because, we've been also hearing that they're going to move the international airport to Ortina. That's not ever happening. I think the one thing that you can expect is Liberia to expand, but don't expect there to be another international airport in that southern zone anytime soon, guys. We had here Las Catalinas. Is it getting overdeveloped? I think probably so. I think when we look at Las Catalinas data, I know that they've had a few issues recently with property management. I think it's getting a little overdeveloped, but again, I think Las Catalinas is more of a lifestyle investment up there. You'll just cover your costs. There's just a lot of property that's there. They've built condos, they've built homes. There's just a lot of stuff going on up there at the moment. And I think until it settles down, you're not going to have a good idea. Occupancy rates are okay. Average daily rates are okay as well. It just depends on, what you've got up there. I personally wouldn't make an investment in Las Catalinas. Would I go and visit and stay? Yes. If I liked it, and I want a place to go and have fun there and just cover its costs, yes, I think it would be a good play. But if I'm hunting for returns, it's not a place that I personally would look at.
Yeah. I think, like, when you look at Las Catalinas, the places that do really well there's that strip of large bedroom count beachfront that does well there. And I think it's similar, like when you look at Los Sueños, there's a bajillion 1, 2, and 3 bedroom condos. So what really does the best there? It's the private homes, because they're unique.
Yeah. Jake, do you know, when we pull the data, we've got a question here from David. Do we consider Las Catalinas the same as Potrero Flamingo? I don't know whether it reaches that far over. Do you know?
I don't know, but I know we can get Las Catalinas specific data.
Okay.
And David, if you shoot us an email, I can send you over what I've had in the past.
Fantastic. Well, I think that's all the questions that we've got coming in there. I hope that's helped everyone. And again, if you want anything else, feel free to reach out to us. Jake will do a follow-up with everyone that joined this as well, and kind of to give you a copy of this presentation as well. But thanks very much for taking the time to join us on the webinar, guys.